Hello, this is Nathaly with the Real Estate Investment Nomad Podcast. Today we have Ron here. I want to go over lending in the US for foreign buyers. Thanks for being with us.
My pleasure. My pleasure. Thank you for having me. Thank you for, taking this last minute meeting on a Sunday. And I know it's kind of late, but, we're here today. So definitely want to share a lot of information, obviously in a short period, and make it as simple as possible for you guys.
Awesome. So first, let's introduce you and who you are, what you do, especially because many of the buyers that are thinking about investing in the US, they don't know the steps. And sometimes they trust the realtor might know, but when it comes to, to a foreign transaction, or bringing money from a different country might be, different requirements.
Right.
So tell us more about you and we'll talk about the process later.
Yeah, no, absolutely. So my name is Ron Osorto. I'm a mortgage loan officer with Nathaly Lending. I operate as a broker. Also, I intend to tie one lender to another to my clients with access to over 300 lenders. And especially with the foreign investor loans, we have about 60 to almost 70 lenders that actively work, depending on the scenario, of course.
Mm-hmm. Well, it's a lot of lenders. So what is the benefit of working with a broker versus trying to send your application to every single bank?
Right.
First,
I mean, for the most part, I would say my focus really is just structuring the deals. Finding the solutions, especially for clients that don't fit traditional guidelines. That includes foreign nationals, ITIN borrowers, self-employed clients, using bank statements, real estate investors, using the DSCR loan programs. Well, my business is a little bit different than most retail. I work basically by myself, so for myself, so to speak, as a broker. I do have the backings and the resources for Nathaly Lending with over, I would say, about 60 coaches that do assist if we ever feel like we're tied somewhere that we can't move it. We tend to pivot in most cases if the program just doesn't fit, unfortunately. But the good thing is that it's a one-stop shop, so you don't have to go and find a new lender and reapprove and get credit ran all over again. So you stay with me regardless. Oh yeah.
So the point of contact, right?
Yeah, I'm the main point of contact. I give my clients my cell phone number. Through WhatsApp, through Messenger, through email, through even phone calls. I mean, for whatever it's easiest for the client.
Awesome. So for those that are new to the lending space in the US, what will be the steps they need to follow to qualify? So with you, they come to you, they're going to fill out an application, and then you go then and look for what's best for them, right?
Right.
How does it work from scratch?
Yeah, simple. I have a website called applywithrono.com. And you can also go to my website, which is workwithrono.com. And from there, you have access to log in. It's just as simple as plug and play. It's going to ask you questions on your personal, questions on your assets, your credit, if there is any credit. And then, of course, we want to make sure that, we put the subject property that we're working on, especially for foreign investors, which will be, for the most part, investment DSCR loans. And so that's step one, is just applying, honestly.
What will DSCR?
DSCR, debt service coverage ratio.
Okay.
So what it means is basically where the mortgage can get covered by the rent comps of the property. And it does not require any of your income. I don't require W-2s, 1099s, tax returns, none of that. If anything, it's just the minor details. It's just for location is everything, obviously.
Right.
And so we always want to make sure that the client knows that, the property might be inexpensive, but the rents might not be enough to cover its own. So we have to be careful on that, right? So it's just things that we guide. And so this is where realtors come in and help out a lot with that. But they always tend to do a good job anyway, the people I work with. So
that's good. So then they don't have to worry about, providing the income. They do have to come up with the payment, right?
Well,
what would be kind of the terms?
Sure. So they're all 30-year loans. They're investor loans, basically. They don't require Social Security. They don't require I-10. If anything, it's
zero.
Yeah,
it's
99999 all the way. Credit-wise, they'll base it off of 680 if you have no credit, because obviously you don't have an I-10 or a social at that. So
like 680 will be the base.
680, they'll base it off of that, and then that's what they'll give you the rate based on that.
Okay. So that kind of is the worst case scenario.
That's like worst case scenario. So
like
it's still best case scenario in most cases. Yeah.
Sure, some people have 500, 400.
Some people have zero. So
There's zero?
Zero credit. Well, because they never established anything.
Right.
Yeah.
So they don't have to worry too much about the credit, because first they don't live here, so they kind of
right. So we're not even dealing with credit at that point.
Okay. So we kind of on the property's rental income, it will be based on location, and you will advise they will get approved
Well,
or if the property
we
is.
pre-approve them based on, we'll take the location, we'll determine what the taxes look like, what the insurance would look like, and what the mortgage payment would look like based on the term, which is the rate, and then the term, and then of course, are we looking for a 15-year, 30-year, just really kind of like what's up the client's really looking forward to, willing to go. But obviously, the home has to qualify itself. So what an appraisal would do is give you two things. It's called a 1004 and a 1007. 1004 is basically what the value is of the house. The 1007 gives you what the rent comps are.
And that's an
So
appraisal report would have, right?
exactly. So you
Okay.
get all both in one from the appraiser, and that's where we start determining. Okay, what's your monthly payment on the mortgage, and then what's the rent comps for that property at that time.
So then they can know the return right away.
Right. Well, they'll know
So
the
realistic
return right
one.
away. Right. But then you'll know if you qualify for that house in particular.
Gotcha. And in your experience, what is the down payment required for these type
20
of
to
loans?
25% at
Okay,
least.
so it's not too bad.
It's not bad at all. I think it's best because it's obviously you're putting your money to work. Your payments are going to be lower. You have equity on the property. Worst case scenario, you need to flip or sell right away in a year, 2 or 10. You at least know you're coming away with something better than nothing, right? And you're not underwater or anything like that. And then of course your payments are comfortable. So for sure.
And I know that each case might vary, but what are the list of documents, or the basic ones that you would have
Simple.
people be ready?
Probably one of the easiest things. I mean, it'll probably be 2 months bank statements from your country, from where you're from.
Okay.
ID. Okay, let's say Mexico will be a matricula consular, a passport as well, and then kind of where your reserves are at,
So like a letter of bank with funds?
so to speak. Well, that could be the case, but then just a regular bank statement for 2
Okay.
months.
Okay. So that would kind of prove the income,
And then-
how long they had their money there, right?
Right, and then the good thing is that they don't require a seasoning period, so they're not going to question where the money comes from. So you could have had $1,000,000 and you just dumped it all at once. They're not going to source it because it's not being followed by TRID or anything like that. It's a totally,
Oh, wow. I didn't know that.
it's
Interesting.
incredible. Yeah.
Cool. So then anybody, can qualify, let's say, if they have the down payment. Because many people are like, oh, maybe I don't have any credit score in the country, so I don't know if maybe my rate will be higher. In your experience right now, like April, right now, 2026, what would be a range of the interest? And I know that will vary based on each case, but
I always
what's
say
kind of more or less.
you have to keep in mind rate is really determined based on risk, right? So that's how rates are determined by the type of loan product that you choose, by the client as well, and so all that plays a huge role. And then of course, how much skin in the game do you have? Did you deposit 5% or did you use 10%? Did you use 25%, 20? So it's all a tier, and then each lender is very individual. So it's not like cookie cutter, unfortunately. So that's why you do require a personalized, service, because you definitely don't want to just jump in because everybody else hears one rate,
Yeah.
but it's not for you.
Yeah.
So this is where we have to be very careful and cautious who we choose as a lender for the most part. So this is where the 70 lenders that I use for foreign investors come,
Right.
because some might fit this box with a low rate, but then something might trigger that it might not work.
Interesting.
So now I got to move somewhere else that will work with an exception in some cases.
Okay, awesome. So then just kind of they come to you, and then you, based on that, you
We'll start with one for sure.
examine what's best for them based on
Yes.
the case on the file.
That's where the application comes in.
Okay.
So I always say fill it the best to your abilities based on your legal name.
Yeah.
Your
Your real name.
yeah, your real name.
Okay.
And so
Cool. So we have requirements. We have down payment information. What would be the timeline if they provide everything to you, and they have an eye on a home that might be
it can be less than 24 hours. Sometimes it can be overnight if you get everything.
so like a pre-approval,
Oh yeah.
and the closing will be depending on the property.
Closing depending
and the
on
realtor and the
well,
circumstances?
right, because it takes two to tango. Because it's one thing that we get the docs out, documentation that need to be signed. If you don't have access to internet or email and you don't sign docs, that just tends to stop the process.
Yeah.
So it's really more on the client's hands at that point in their game, their ballpark. So this is where I come in and I try to stay on top of them. Hey, there's going to be an email going out. So I explain to them, check your emails 24/7,
Yeah.
because something might come. And I've seen it go out like at 11:30 at night or 1 in the morning, documents and that need to be acknowledged. and something that could fall within the cracks. And we definitely try to avoid in a little
Yeah.
minor details that we definitely don't want to avoid. So
Always delays the process of closing.
it delays everything. I mean, and just conditions. The good thing is about those types of loans is that the conditions are not as hard. It's a lot of it is mostly like, does the insurance, quote is enough? Is it covering enough? Or if the insurance is too high. I do things a little different than most lenders do. I have my processor. We shop about 6 brokers for insurance, homeowners, owners
Nice. So you help
insurance.
them with that too?
Yeah.
Oh, that's awesome, because otherwise they send you so many letters.
Well,
and you're like, I don't know who for what. And
what I've seen is that the lender sometimes is so focused on the process of originating, but they forget that they also have to help a little bit because we also have connections with that. And so it's a resource that we use. And so why would we take advantage of it?
Right.
So most I've seen in the past where they expect the borrower to go and find an insurance. Well, a lot of times they give that insurance quote so high because there's added stuff into it, like personal items on an
Yeah.
investment loan. You don't need to. It's a landlord policy. I don't need you to be protecting private personal stuff like a couch. That has nothing to do with you.
Right.
You see what I mean?
It's
So
a
they'll
tenant.
exactly. So you're paying more for something that you shouldn't be.
Especially when they're from a different country, they don't know how
They
to
don't know
compare
any better.
insurances or what's good or what's mandatory or what's the minimum for anything like that.
Right.
It's good that you help them with that, because I have myself a very hard time picking insurance.
Right, because you're
I'm
like, well, who do I
know
go
what
to? You know what I
yeah.
mean?
And there's no way, like, now with AI, probably you can compare side by side, but it's
Right.
just so hard, like reading in between the lines, what's each category. And at least
Correct.
if somebody helps you, they know that's the minimum requirement and what is recommended. Maybe above
Well,
that.
and that's correct because when you're dealing with DSCR, remember it's based on what the mortgage is and if the rent comps will cover that mortgage. So if the mortgage is 2,000 and the rent comps are, I don't know, 1,900, well, you're $100 short. You see what I mean? So it might not work. So now we got to find an insurance that's $100 cheaper a month.
Yeah.
That's the key factor.
Okay.
Or do we need to bring down the rate? Do we need to buy points? Do we need to bring more cash to close? So it's a puzzle that eventually, once we get all the right pieces in play, what's left is what we work on the hardest. Either way.
Awesome. In your experience, at least we're in Dallas right now, do you have any specific market or country that likes to migrate to the Dallas
Area?
land area? Your
Yeah.
experience, like who's coming?
I've been seeing Australia, Canadians, Mexico, from Colombia, even from Venezuela. Yeah.
Okay.
There's individuals that maybe have their kids that came with TPS and whatnot. They want to buy them a house, but they got money in their country, but they don't know how to get it here, or they don't know. The daughter has a social but no credit, no income because they just started working.
Right.
And they're like, well, I want to buy my child a home there, because I come and visit too,
Yes.
based on visa, right? So they want to establish that and then eventually get into the investment world because they have businesses in their country that are not thriving like they would here,
Right.
So they'll sell property in their country and buy here 2 or 3 houses with that same money. Then obviously you want to establish something here if you have something ready to move forward with,
Yeah.
I have in all types, like I said, all types of clients that some of them come with like the J1 visas for, to be come and work for 2 years and whatnot, but they have their citizen children that are citizens, U.S. citizens. And obviously they got to get waived, right, to stay here longer and, continue working using those types of visas. But I don't see how that would not be seen, but I don't know how that would play in today's world. Especially things seem to be kind of going a little bit more difficult that route. Yeah, especially with the appointments with the immigration and them qualifying for permanent to citizen, So it's
So we're gonna do a whole interview on immigration. How do you get your residency by investment, or the golden visa? We don't have that, I think, anymore. But I was curious to see who was moving to Dallas, and many people ask about property taxes and if that's involved. That's in the payments that they have to do monthly, because we know that we have to factor that in.
Yeah.
Like always.
Oh, of course, of course.
But how does that work in the property taxes? That they bundle into the loan and then they make the payments.
Right. So it's you establish an escrow just like a regular loan. And you still have your mortgage payment, which is principal and interest payment too, of course, but that's based on the note, on the debt. But then you have insurance based on what we find for you to get your insurance. That gets divided by 12. So the whole premium gets divided by 12. Let's say it's $1,200 a year. It's kind of low, but still possible, right? Your payment will be $100 just on insurance there. Okay. Taxes, taxes is based on the property. So it's not solely because you're a foreign, we're going to tax you higher. No, on the contrary, it's more of each county, each city, there's special districts, there's taxes like mud taxation. I mean, it's just a slew of things that will give you a total for the year. Estimated taxes is what gets used based on what the county gives us.
And for the taxes, that if they make any income on the property, right? Like they have the income tax. And again, that can be a conversation with a tax expert. But in your experience, what's the rate that they need to pay to make any money out of the property beyond the bills?
Well, like I said, it depends. If it's a long-term thing, then obviously the more you put in, if you find a discounted property with higher rate of return for like let's say the rentals, then obviously this is where we have to see what the comps outside, which is something that the realtors can help before they even jump into a contract. They want to make sure that, hey, this house actually can qualify for so much, and then we'll determine what the monthly payments are. Then you can kind of see if it's worth your while making $200 a month up to $1,000 a month or more.
And you can put it back to the principal, right?
Well, you can do that or save it to buy the next one as well.
Cool. So therefore, they get some extra money when
Or save it for repairs that could come because it's a house.
Yeah.
Anything is possible, so you got to make sure you have reserve for the property too. So this is where, when the lender is asking not only for the 20% down, 25% down, they're also going to ask that you have 6 months reserves as well. So it's not just so much about the down payment.
In the country, or
Anywhere.
Has to be here?
It just has to be a total.
Okay.
So you have your down payment of whatever percentage we choose, any closing cost that doesn't get covered by any concessions, and then you'll have the reserves on top of that. So yeah, this is where when I start structuring a loan, I'm going to advise specifically how much cash to close you're going to need, and then we'll determine how much cash you have in reserves, combine the two, and say, okay, this is how much you need in the bank. You'll figure it out, I'm sure. Yeah.
And I was going to ask you something for the money in the bank, the 6 months, let's say they don't rent it, right? That's what the buffer is for, like the 6 months.
Right.
And when it comes to the insurance, they got it covered. Taxes are bundled into the total, and then the mortgage payments that they do. So we're talking about rental income. And what about closing costs? I mean, I know that it will vary by loan, but what should they budget for? And does that usually come out of pocket or from the loan? Or it depends?
It's at closing. So what that means is that we'll give you a loan estimate. We'll break down all the fees. If there's any seller concessions that we can get, then that'll offset some of the closing costs, because your down payment, that's already going to happen regardless.
Okay.
You got to bring that to the table, right? Minus whatever earnest money you give, which is the 1% in some cases, an option fee. But that's already for sure you have to bring to the table. But closing costs is where I talk to the realtor and I say, hey, look, based on what I have, based on reserves, based on the conversation we have, I might ask for 6% seller concessions. I might ask for 4% because it'll offset whatever we have. That'll meet our goals. Also, I would try to probably make a suggestion. I get it. Everybody likes cheap or everybody likes lower, but sometimes that's not the answer, because you don't win a lot of deals when you try to shortchange the purchase amount and then ask for concessions on top of that. Especially if you're an investor, I don't know. I mean, you have to be logical about it, not emotional about it.
Right.
It makes sense to say, I'm going to honor what you're asking for, but I need 6% help. You see what I mean? Because then we can probably buy down the rate. You know, we can work whatever we need to work to make it, favorable for the client, of course. But you'll be surprised. Sometimes you'll find a good deal without the need of having to lower the purchase price.
Okay, cool. And I think the last question will be condo versus house. What do you think is best for an investor that is starting?
House.
Because the condo has so many requirements, right?
Well,
Because of the building.
Yeah, condos tend to have a lot of red tape, so to speak. They tend to have a lot of issues with like their HOA fees, even their master policies on the insurance that might not be enough for that lender to accept. You might run into where it's a warrantable condo or a non-warrantable condo. Overlays happen, maybe higher rates because of that, because of higher risk. And then you have higher HOAs that maybe the DSCR might not qualify, because your monthly payment does also hit you with that HOA fee that you might pay quarterly or annually, but that they use that against your, the monthly payment. So if the DSCR is not equal to the 1-to-1 ratio, so to speak, then you might run into problems because rates tend to be a little higher. Plus, they require higher down payments too.
Cool. So
Yeah.
now we know. We have the type of home that you might want to,
Preferably.
look into, down payment, taxes, and also the maintenance and everything that comes with that.
Right.
Post sale. Awesome. Okay. So, what are your last thoughts on what haven't we talked about that we should talk about when it comes to lending for international buyers?
Well, the thing is, I always make sure that we're working with, like I said, lender guidelines and compliance.
Yeah.
We don't assume future status changes because we don't know. We don't know if you're going to become a permanent resident all of a sudden. You know what I mean? So I'm going to treat you like a foreigner, and I'm going to treat you everything exactly that we need without having to bombard you with other stuff that has nothing to do with you. So we definitely want to qualify based on their current situation. We verify everything. So we definitely want to make sure that you're going to close, and that's it. Rates, like I said, it's just individual, and then lender too.
Okay, perfect. So now you have all the information that you need. If you have any questions, you can ask Ron directly. We'll have all his information, his phone number in the description below. How can people find you online right now?
As a matter of fact,
Instagram, Facebook, or
so
Do you
you
have a
can
YouTube?
go to my webpage. Actually, it's workwithrono.com or workwithrono.com. My website has my Facebook, my Instagram, my LinkedIn, has more information regarding foreign investor loans, I-10. We do any loan that you can think of, FHA, conventional, non-QN, non-qualified mortgages, traditional mortgages, VA, USDA. But I do a lot of bank statement loans lately, a lot of DSCRs. That's kind of been my forte so far. But then also with the I-10 DSCRs and I-10 bank statement loans, I've been doing a lot of those lately.
Okay, cool.
Yeah,
So if you don't understand any of those terms, you can ask Ron for more information.
Smarter down, don't matter what it is. All you gotta do is ask. It never hurts to ask. And you'll have my direct phone number, my cell phone number. You can always text me through WhatsApp, through my messenger, or even email. Or call me, whichever is best for you.
Awesome. Thank you so much, Ron.
All right, you're
See you
welcome.
guys. Thank you for joining us on the Real Estate Investment Nomad podcast. I hope today's episode has inspired you to explore new horizons in global real estate. Remember, the world is full of opportunities waiting to be discovered. And with the right insights, you can turn those opportunities into successful investments. If you enjoyed the show, please subscribe, rate, and leave a review. Your feedback helps us bring you the best content possible. Don't forget to follow us in social media for more resources and updates. Until next time, my friends, this is Nathaly Salas, encouraging you to think big, invest globally, and transform your real estate journey. Safe travels and happy investing.